Well, good evening, everyone, to the webinar that we're hosting today from Avant Practice Solutions, focusing on transitioning out of your practice. My name's David Williams. I'm the General Manager of Avant Practice Solutions, and I'll introduce the other panelists. I'd like to start by acknowledging the acknowledgement of country, and in the spirit of reconciliation, Avant acknowledges the traditional custodians of the country throughout Australia and their connections to land, sea, and community. I'm standing in the lands of the Boon Wurrung people from the Kulin Nation, and we pay our respects to their elders past, present, and extend that respect to all Aboriginal and Torres Strait Islanders people here today. We're really pleased to have you join us in the seminar. It's a third of a group of seminars that we've been running on components of running a practice, and it's fitting, I think, to end on the topic of transitioning out of your practice. This webinar's also supported by Avant Law, which is the commercial law firm at Avant, and Avant Financial Services. And part of this webinar is to make sure that the community and the Avant membership are aware of the diversification that Avant has engaged in over the last years, and now has a very good team of people that provide practice management support through Practice Solutions, very strong financial services arm, and also a strong commercial law firm in Avant Law. And you'll meet the members of the team today. Now, a bit of housekeeping. This seminar goes for an hour. There's a good amount of time to answer questions, perhaps in the last 20 minutes. So we'll have a bit of a panel. So do save up your questions. Perhaps more efficient than yelling out questions at that time is to use the question and answer tab. So you can access that from the bottom of the browser here. Type in your questions. We'll keep an eye on them from our angle. We'll try and answer them. Probably most of them will flow on to that last 20 minutes of Q&A sessions. I will introduce first perhaps Michael. He's a senior associate from Avant Law. He's going to be talking through some of the legal and regulatory requirements of closing down your practice. And Kate Farley is really experienced in the provision of finance for doctors buying practices. And it's really important because if we're talking about selling your practice, you're generally going to need a doctor to buy the practice. So Kate's going to take us through some of those requirements and the considerations you might have. As for me, I'm a neurologist and a practice owner. I spend most of my time now working in the practice management consulting team at Practice Solutions, where we provide a team of people that support doctors through all stages of their practice, including this important stage of getting value for your practice and potentially transitioning out of the practice. And if you don't need to take notes, we will send an email with a link to the recording of this webinar. And if you have to leave early, you can also watch it later if that's what you want. So let's start talking about this really important time in a doctor's life cycle. Generally, it's a whirlwind doing the training and the qualifications and getting your skills up and then setting up your private practice. Hopefully with the help of Avant Finance and Avant Practice Solutions and Avant Law. That didn't happen. That wasn't around 15, 20, 30 years ago when some of the listeners, I'm sure today, started their practice. But now we've got a chance to, in a very deliberate way, consider the other end of the spectrum. What happens when we're finishing practice, when we're leaving practice, or we're trying to gain value for a practice that we've put our heart and souls into during the course of our professional life. The transition out of practice might include just winding down and quietly leaving out the side door, or other end of the spectrum, it might be looking to maximize the value for the efforts you put into building that medical small business and trying to sell it. So we're going to cover that first. We're going to have a chance to go through the regulatory requirements a bit later on. These days, when we're talking about people talking to people about starting their practice, we generally take an approach of thinking about the end at the start. And that end is really trying to maximize the benefit of the effort put in. So now that we're talking about the end, what are we talking about? We're talking about selling or offloading or passing on the responsibility of the practice to someone else. Now, if you are exiting practice, obviously your professional skills aren't going to be something that's being sold. In fact, you want to take your professional skills and go and do something else, or retire and lie on a beach. So what is it that you are selling, and what is it that we're packaging up to say, this is of value? Would you like to take it over? Would you like to pay me something for it? And one of the considerations I'd like you to think about is, what is it that you could sell in the practice that you have if you're not selling your skills, which is what you've sold for the last decades in that practice? And the answer is that you can sell the brand and the systems that you have in the practice. Now, if it's Dr. Wayne Smith, you can't sell Dr. Wayne Smith because you might be retiring. But if it's Smith and Associates or High Street Orthopedics, or Ringwood General Practice, that's a brand that isn't attached to you, but that is attached to the value of the practice, the systems, the patients, the referring doctors, or the community. And in that way, it's possible to capture the value that you have put into it over the years and that you would leave behind. So it's not just the cost of the computers, the cost of the chairs and the window furnishings and so on. It's actually the systems and the processes and the patients with inside the practice. One of the very strong components of value will come in location. So if your practice is situated, where your practice is situated, it presumably has been for a while, and patients are used to going there, and doctors, if it's a referral service, will be used to referring there. So the street location, the website, the telephone number, the fax number, and the email address are all of value because they're presumably already in patients and referring doctor systems to be able to send patients your way. Now, that is of inherent value because imagine a doctor starting next door, they don't have all that referral base or the communications amongst the referral network. Presumably, if you've been in practice over a number of decades, you have had a chance to optimize the systems within the practice. There is a steep learning curve, which many of you will have gone through, to try and improve your financial handling systems, your HR systems, your staff training, the way the desk is laid out, where you keep your consumables, and the process for ordering and look after a cash flow. What I'd say, there's an opportunity if you are looking to wind down from practice or sell practice. As soon as possible, you look at what is good and valuable inside the practice. And the closer you are to a gold standard practice in terms of operational efficiency, the more value you'll get in there. So if you can prove to someone who might like to buy your practice that you have really good HR systems, that you have really good financial handling systems, that your practice management and reporting is of a high value, then clearly someone will be more motivated to spend a little bit more money to take that practice off your hands. And a good way to test that, how good is a practice, how optimal is it running, we look at the type of software that's used, the capabilities of the staff, and how well the staff are trained. Also, the number of staff required to produce a service. If you have become perhaps a little bit reliant on staff and you have 3 secretaries per doctor, that's not a highly efficient practice. On the other hand, if you're selling a practice that has 1 secretary that looks after 3 doctors, that's a little bit more, it's a little bit more profitable and more sustainable over a long period of time. So I would suggest that if you're looking to exit your practice, take a long-term approach to, between now and that time, how can you improve your practice from a gold standard perspective? And practice management consultants, our team works with plenty of doctors that are looking to exit and trying to reduce the costs, increase the efficiency, and therefore improve the profitability of their practice. That sometimes includes getting rid of those business anchors, those things that you just haven't fixed up over years, that you know the practice should be could run better if you updated the computers, or if you trained the practice manager. If you get rid of those anchors and make it more attractive to sell, then you can get more money for your practice. And an efficient, independently profitable practice is going to be more attractive than one that's not working well. Keep in mind also that if you are transitioning out of practice and looking to get value for practice, when you leave, there are a whole lot of administration activities that need to survive you. And potentially, if your spouse has been contributing to the practice, you need to make sure that the person walking in can have a operating practice that includes the strategy, the HR services, the bookkeeping and payroll, and the administration resources. If staff are going to leave when you leave, that's not as good a sell as if you've got a fully operational practice that's highly efficient and profitable. Again, if you aren't quite at that stage, then get advice or potentially use Avant Practice Solutions to help you redesign the practice so it's more valuable. And it doesn't take long, maybe 2 or 3 months, maybe 6 months, but it can be the difference between selling the practice for $40,000 or a couple of $100,000. If you are looking to hand over the practice or sell it, you need to find someone who's got the ability to imagine themselves working in the practice, and you want to maximize the emotional buy-in. Now, you may be a brilliant doctor, you may have the best patients, but if you're offloading the practice to someone else, they have to believe that as well. The simplest way you can do that is update your website. If someone's going to research your practice, the first thing you're going to do is to look at the website. If it looks like it was built in 1985, you're really not going to start getting that emotional buy-in. So for the cost of a couple of $1,000s, you can upgrade the website, make it look brilliant, have some fabulous photos of you and your patients and the practice, and help with that emotional buy-in. A little trick that definitely works, because you're going to have more engaged people when they come to you and start talking about the other mechanics. They're going to do their research online. And think about what the buyer sees. So it may be a colleague, maybe someone you don't know, or even a corporate. What are they going to see when they walk in the practice? You're going to have nice flowers. You're going to have a nice clean desk. You want to make sure that the presentation of the practice, when you're getting to that point, is going to enhance the emotional buy-in, and it will make a big difference in terms of where you can settle in terms of the value for you. Once you've got the emotional buy-in, then it is going to the nuts and bolts, the mechanics of how will a practice be valued. And Kate will run through some of the components that are essential for a purchaser getting a loan. But if you don't have financial reporting that's well organized, that discloses the revenue and also the expenses, then it's going to be difficult to get a proper valuation, and you're likely to lose out in a sale process. Keep in mind that if you've had long-standing staff, you may well have staff entitlements that are quite a financial burden on the practice and might reduce your how much you can sell for. And when you're finally exiting the practice, you do need to have the help of someone who's going to plan it. And you're going to see some of our team members that do that here. But a practice management, business management consultant can talk you through this. You're only going to exit your practice once. You want to make sure it's done well. So you want to project plan it and make sure that all those anchors, those value anchors, are removed. We'll hear from the lawyers and your financial advisors, but you want to make sure that you've got bookkeeping and payroll in order as well. The practice will have to run without you. So putting that into plan as part of the valuation. So what is the timing? How far away from you exiting are you going to engage someone? And that's going to be different for different practices. Whether or not you have to hang around for a few months or even years afterwards to maximize your value is a consideration as well. And we're going to hear about the regulatory requirements for notifying patients and your referrers. And really, are you going to make yourself available to support the new owner? I'd recommend that you plan to exit with a clean break and don't hang around the practice, but that all takes lots of planning. With those things in mind, I've described some components that you can do in the months before selling. Really important to get that organized. Kate, take us through the financial considerations and how people are going to value practices.
Thanks, Dave. So as being mentioned, a lot of what the transitioning out of private practice entails does require a few different support points. It could be from the funding, it can be from the practice management side, can be legal. Accounting is a huge one. Just with my background on both in the banks and now as a broker for finance. I've seen all sorts of practices at varying states being put to the market, and the ones that do have everything in order, it's much easier for a prospective buyer to get the funding approved. So that, if that's the key takeaway from tonight, probably have your practice reviewed to see whether or not it's saleable in its current state or whether action needs to be taken in advance. So the main considerations, I think, is probably what you want out of the sale or transitioning out of the practice and what that actually means for you, because that can be different for everyone. Whether somebody actually is a sole owner of the practice, they own the bricks and mortar and they've run the practice and they've got consultants in there, and that's your situation. Or it could be someone who is already part of a multi-partner practice. They don't own the bricks and mortar, but they just have some goodwill value as part of that practice itself. So it means different things to different people as to what selling or winding down a practice could actually mean. So I guess take from this what you can, because it may not specifically apply to you, but the broad theme here is just, if you are planning to sell it, make sure you do some due diligence first as well, so that you don't have any roadblocks down the way that you weren't intending or that came in unexpectedly. So the main point here would be how long before you're hoping to retire, or transition out of the practice, what you need to work towards to that in terms of timeframes. And are you in a position, as Dave mentioned, whether you'd be willing to stay on with the practice? Because it depends on who the buyer is. If there's someone that's outside the practice or has limited experience, then the vendor staying on is actually a big key consideration when a bank or a finance provider is looking at whether to approve the loan. And that could then mean that you've got less prospective buyers and ultimately impact your sale price if that's not something that is on the table. Is the practice structure set up correctly to allow for the sale? So if you are only looking to sell part of the practice, have someone buy in rather than the entire practice, is the structure set up correctly to allow for units in that practice to be sold? That is a big thing. I've seen some interesting practice structures over time. So if you don't have a specialist accountant, there is a good chance that the structure of the practice may have some areas that could be improved. And is your practice currently set up as an attractive investment for other practitioners? So that could be that, again, you always remember the war stories. It could be that you've got a family involved in the practice that are in paid roles that may or may not contribute to the actual functioning of the practice. Things like that can put someone off buying in because they have a feeling that it could get a bit messy with the transition period. Could be that things haven't been kept up with the keeping of records hasn't been kept up with what the current requirements are. Lots of paper files everywhere. It's just making sure that someone looks at your practice, they see it as a functioning practice, not as a checklist of items that they have to undo or start from scratch, in which case it might be easier for them to go around the corner and take a lease and do their own fit out, because they have to effectively redo everything that's in your situation. So one of the good things, though, is that with medical finance, assuming all the boxes are ticked around whether it's a viable practice, there's a lot of funding available. There's no need to be offering a home as security. There's very minimal instances that I see where cash contribution is required. So if you're just selling the goodwill in the practice, then we can do 100% if the valuation of the practice is usually aligned to the financials. So this is something where it is very important to have clean financials ahead of time. So if you do have family members on payroll that perhaps aren't contributing, or other items that probably wouldn't look too good for a third party review, then now's the time to start cleaning that up, because they do look at 2 years worth of financials and use that to ascertain the value. Some lenders will use the contract price as the valuation, but others will insist on their own independent valuation. So this is part of that. It's better if your purchaser has got existing private experience, because potentially if they are taking over the entire practice, it's best if they're not just fresh out of their fellowship and looking to start something from scratch. If they've got some experience there, and even better if they're already in the practice, that's a really good opportunity there. So if they have worked in the practice, there's far less onerous conditions around understanding what is behind the buyer, because they know what they're in for. There's an easier transition period. Sorry, I think that went ahead of time. Okay, there. Sorry, don't know what's happened to the... Okay, so in terms of planning for the future, it's establishing your retirement timeframe post-sale transition. So if it is something where your practice will be going to one practitioner as just a clean sale, it's not a multi-partner practice, then you've got to factor in that there may be that requirement to stay on. I know Dave recommended against it, and I can appreciate why. But if it does mean that you've got more prospective buyers by being willing to stay on 6-12 months after the sale, then that's really something to consider. If you've got existing consultants in your practice, probably just getting them on board, scouting out if they're actually interested in buying in. This will be touched on later from the legal side about perhaps giving them a partial incentive with a share agreement and things like that to get an idea if they actually want to be part of the practice, and that actually helps build it up ahead of the sale. Engaging specialist accountant and lawyer to assist with the structuring and determine the next steps. So you don't know what you don't know. If you haven't had a review in recent times, it's probably good to get an external view on how everything is right now, because that will impact the ability to sell. And discuss any inhibitors to the funding with a finance broker. So I'm not sure if you've already got someone in place, but this is what we do. Probably approach us and we can have a look at what your current setup is. It could also be that in order to make it more attractive for sale, you've got to upgrade your equipment, maybe give it a bit of a clean up, update some systems as well. And it might require some capital expenditure, but then you've got a practice that's far more lucrative to be bought. And if you're retaining a premises, you've got to look at the lease. That's the first thing that gets asked whenever somebody's getting funding for a practice buy-in. We've got to understand what the cash flow projections are going to look like compared to what the last 2 years look like. And that's where, if you've got extra people on payroll, that muddies the water as well. But the lease is a key consideration, because ultimately that's a fixed cost, and it's usually higher than when it's an owner-occ setup. The new lease that you do for a third party is usually a bit more in line with market rates. So just a rehash of what we mentioned before. So equipment and fit out, we can do 100% finance across the board. Same with goodwill. So the only thing that's different is the terms. So whichever lender you end up going through, or what they can offer, it's usually a negotiation. So it's 7 to 10 years in that area, 10 to 15 for the goodwill side of things. And the building finance is usually 25 to 30 years, depending on the lender. So it's very much in line with mortgage rates. And you can do 100% funding. So anyone who has their personal assets tied up with their practice, try and unwind that now, because that can get very complicated if you are looking to sell as well. And SMSF funding. So a lot of practitioners I know have their bricks and mortar in their super fund, because it's very lucrative to do that. You can do up to 80%, and we can go even higher if it's just by negotiation or exception if needed. So there's a few little elements there, but fundamentally though, the support is there because you've got a really good tenant by having Medico practice, especially if it's own OC. And that's it. That's it from me.
Thanks, Kate. So my name's Michael. I'm coming from Avant Law tonight, just to speak, I guess, more to the legal and regulatory side of these types of transactions. So just move through to my first slide. But before I dive into those bits and pieces, I want to just stop for a brief moment and ask you to think about, why have you set up your practice? What drew you to establish the practice in the first place and put all your time, effort and resources into that enterprise? Was it to try and build a healthy practice and ultimately sell it to someone else for a good return? Was it perhaps just to help your income go from strength to strength during your career? Or was it more to do with your community and seeing a need that you could actually plug into and help those around you? And maybe it was all of those things together. But regardless of where you've come from, there will be a time where we do have to sit down and say, okay, what does the end look like for me? Now, that could be, as we've talked about, a sale, and that's quite common. It could just be simply walking away, closing the door and not having an interested buyer. And that can happen for a few reasons. Maybe the nature of your practice, where it's located, you just may not be able to find that right person to take over. But in either circumstance, there are going to be quite a few things that you need to tick off from a legal standpoint, or at least consider as you're going through that process, whether it's sale or shutting down. Now, probably one of the first things that we do get asked is around patient records. Now, I think I saw David mention there in the comments that if you do sell, it's great because you can pass those records on to the incoming purchaser, and you can shift that responsibility onto them as part of your contract of sale. If you are walking away, you will have to consider additional requirements in terms of safe custody of documents. So you'll be needing to look at transferring records to your patient's new GPs, but you may need to hold on to paperwork longer than if you had just sold to somebody else. You also need to think about external issues like insurance, medico-legal and other requirements for those documents and whether you need access to them in the future. And I guess that probably extends further to your business documents. So things like tax returns, BAS statements. Do you have a copy of those things? If you need them in the future, how will you get them? Where will you store them? And I should say storing them at home, not such a great idea. So you do need to have something fairly formal in place in case it's ever called upon. Now, either way, whether you are selling or just simply shutting, you will need to notify people. You can't just simply disappear. In some states, that's quite active. You do need to put a very public notice out there that you are planning to leave practice. Not all states require that, but you may still want to do that anyway, just to cover off. It could be things like posters in your practice. It could be letters to your patients and even mentioning it to them in your meetings with them. But certainly mixing those together will definitely help cover off that issue of consenting to a transfer of records. Something else to consider as well when you're selling, do you have anything that needs disposal? Do you have any Schedule 4 or Schedule 8s that need to be disposed of, prescription pads, papers, things that you will no longer need that need to be dealt with? And in saying that, when you do leave, what happens to those people that would normally contact you outside of your patients? How do they know what's going to be happening in the future? So you do need to reach out to people like your insurer, Medicare, your local hospitals and other referring organisations, telling them not only what you plan on doing, but also who's going to stand in for you. Where do they send that information going forward? Now, just on insurance, one thing to think about is, do you need runoff cover? So definitely putting that into the mix. From a tax financial perspective, you'll need to get all your records up to date. You can't just leave in January and say, great, no tax return for this year and walk away. You do need to complete those things. But once that's done, you can't just leave those open indefinitely. You'll need to contact people like ASIC and ATO to shut down your business name, if applicable, your GST, your ABN, that type of thing, depending on your circumstances, of course. Now, Kate also mentioned leases, very important, often overlooked. If you are leaving practice, you don't want to be selling or winding down and leaving that lease open. You could still be on the hook for quite a few obligations, whether it's the lease itself, bank guarantees. So you want to really have a clean cut from those, whether it's surrendering the lease, transferring it to somebody else. It does need to be dealt with. And likewise, employees, are you terminating them as part of your shutdown? Are you transferring them to someone else? And the financial outcomes will be different depending on which of those you are doing. Ultimately, that's a long way of saying there's a lot of things to consider. Certainly quite a bit to do. But whilst that's all part of Wind Up, I did just want to touch briefly on ways you might incentivize doctors to stick around and also ultimately buy into your practice. So build it up over time and take over from you. And a few legal tricks that we see in some of our agreements are these, which first one is the ratcheted service fees. So encouraging practitioners to bill more to get a discount on their service fees. And you'll see there the example that as we increase in revenue, our service fee goes down. So definitely something for practitioners to look at. In other arrangements, you can also look at creating special share classes that might incentivize somebody to generate revenue. So for example, if you've got somebody that is quite a high revenue earner, you might say to them, this class of share will allow you to share in the profit at the end of the year if you meet these certain targets. Again, it's all about trying to keep people involved, keep building the business for you, and ultimately have that buy-in, like David was saying earlier, to see them taking over one day, not just this is a place I work at the moment. And just briefly on that, we've built up this practice. We've done all those notifications and passed on all the records. We finally take a breather. Then what? And I just want to briefly mention estate planning, because if you've got to this point, you've worked really hard. You've seen the spoils of your labor, and we don't want to waste that. So that's where estate planning comes in. You'll be surprised, it cuts across all industries, lawyers included, that almost half of all Australians don't have a will. It's a very dangerous place to be, because essentially you're just leaving it to chance to see how your estate might play out. And I can say, certainly from experience, it's not nice to see how that plays out in reality. You don't want to put that on your family when you pass away. So whether you're looking to sell now or in the future doesn't really matter. Doing your estate planning now can really save you a lot of headaches in the future. There are other incentives as well. We can structure wills in a way that can minimize tax potentially on future income earnings for your beneficiaries. We can help address potential family provision claims and those contested wills. But if you don't take that first step, there's nothing we can do. So you do need to really make sure that you're jumping into that as soon as you can. And just briefly as well, I know we tend to see this in the medical industry a lot, the power of attorney and enduring guardian. Really important. Whilst we hope nothing happens to us, I've certainly seen my fair share of very healthy, well-operating practitioners who have been struck down through injury, accident. It can literally happen to anyone. So don't put off having attorney and guardian arrangements in place. Even just from a business point of view, it allows continuity. Somebody can actually step in and look after your bank accounts and sign off on things and sell the practice if need be. I did have one case of a practitioner who operated solely, lost capacity, no power of attorney document, ultimately resolved, but the delays significantly cost him in the end. Whereas if somebody could get in from the get-go, I think we would have realised a lot better outcome. So definitely a lot to consider there. And sorry, it's all condensed, but just mainly to flag there's a lot to think about from a legal point of view. That's me.
Thanks, Michael, and also Kate for your earlier presentation. It's a complicated part of the business life of a medical trainee, and let's face it, no medical trainee really is trained in dealing with the law or the finance formally, or having formal business training. So this is why we're covering this as an area of need for practice owners and doctors. Look, feel free. We've had a few questions that have come through, both in the QA tab and even prior to the meeting. I think a nice one to start off with which kind of talks to the themes that have run through this, but although perhaps we haven't been as explicit as we could be. We had someone ask, can someone comment on the coming issue of payroll tax? I'd argue it's a current issue rather than even coming, and how will it affect the sale of practices and the ramifications of doctors being classified as employees, doctors, and working in a practice? Before we get Michael to answer from the legal perspective, I think it does, if we take a step back and think, if we're selling a practice, what is it that we are selling? Because we are not selling the other doctors unless they're employees, and most practices don't have employee doctors. So I think it requires a reflection from the practice owner of what is inherent in the practice. And generally, if we are the principal owning a practice, we're actually managing a practice. We're managing a workflow for patients to come and see doctors, and you are helping provide the administration and infrastructure for doctors to provide their independent practices. So to the extent that that has got any value, it requires other doctors to work there if it's a multi-doctor practice. So if you are selling a practice that has other doctors working within it, what you have to put your mind to is maintaining the reason why those doctors would stay there after you've left anyway. And presumably that's done from the branding, the good administration workflow, and setting up what we've described as a gold standard practice, so that there's no reason for someone to leave after they go, and so that the purchaser can get a good sized loan from Kate, and so that the administration workflows are really straightforward. Mike, have you got comments around the payroll tax issue?
Yeah, definitely. I mean, certainly payroll tax, it's like you say, it's a live issue. We see it very, very regularly. I guess probably where quite a few people get caught up is that perhaps they think their arrangements are above board and that they've been doing it properly. But when we dive into the documents, particularly if we haven't looked at them for a long time, we might inadvertently be getting caught by these definitions. And there are a lot of things that can indicate that, including things like the inclusion of certain work terms like annual leave and just restrictions on how you operate like an employee would. Those things, if we're seeing those in the structural documents, there is a risk that payroll tax could apply. And there's lots of things that could trigger it. Ultimately, to be safe, it's better to get the documents in order now rather than hoping you can kind of just fake it till you make it. That's probably the best advice I can give in a short term. Ultimately, if you are selling a practice and there's a payroll tax liability floating around, an incoming purchaser is not going to take that on. That's going to sit with you. So you do need to kind of make sure you've got all your ducks lined up, and that it's very clear who's working for where, or which entity. And in terms of your actual practitioners, if you're not engaging them as employees, having that documented, so having it very clear that they're contractors, how they're paying service fees and all those types of things in. But yeah, certainly I would say it's a live issue at the moment and not one to be taken lightly. So if you're not sure, get your current structure documents reviewed. Don't just leave it and hope that you'll go under the radar, because there's no guarantee.
It's fair to say that revision of those documents should take into account that there is people who are attendees at this webinar are at a stage where they're looking to transition out, so that those documents need to survive a purchase event or a transition event where potentially the corporate entity that's providing the service to those contractors may well change. Certainly the shareholdings would. We've got another question from Daniel, who is a solo private specialist physician and wonders how on earth could he sell his own practice. Kate, what do people look for in value if they're looking at a solo practitioner's specialty practice?
So usually it's around the network that a solo practitioner might have. So if you're getting referrals from other GPs or just your personal network, if it's something that you can potentially hand over to someone who's looking to buy your practice from you, then that creates value on its own. So if you've got someone who's kind of newly minted or new to the area, they don't know, they don't have that network behind them, and you're looking to transition away, then that could be someone you could bring in to potentially buy your practice. So the devil's in the details. So this is where the business plan, cash flow forecast comes into play. If ultimately all of your referrers can redirect it to the new consultant, and there's a fair amount of confidence behind that there's not someone else that they'll just redirect it to, then that creates value for the practitioner who wants to buy from you. And if you're renting rooms or you own the suites, and you've got some physical presence there that people know that's where the specialist is that they can go to, that adds value as well.
And look, Daniel's practice, I think, is a highly specialized practice and a very, very loyal patient base. And I think, if you have years before you are looking to transition out of practice, the idea of mentoring someone or bringing someone into the practice who's got complementary skills is highly attractive, because they can they can contribute to the growth or the sustenance of the practice, and then be encouraged to take it over a period of time and see value in that. And in some of the model that Mike put forward before, there's other ways of doing it, encouraging people to progressively buy into the practice rather than a single sale event is a way to transfer some of the branding that you've spent time building up. That's one of the reasons we really get people to think about what the value is they're building in the practice at the start, and think about that brand, that location, that referral base, or the community they work in, so that value can be transferred over the end. It's hard to sell your name when you're retiring, but I think we've covered some ideas about how to set that up and planning it. Mike, here might be a question that you'd like to touch on. The medico-legal expectations or requirements for care of ongoing patients of a specialist doctor. In the case, or I'm reading this wrong, if a specialist closes a practice without selling or passing on formally, in this case, all consultations are fully documented and correspondence sent to primary physicians. So what is the responsibility for passing on information? How complete does it have to be? I think we're going to know what your answer is.
Yeah, I mean, certainly, and I say this as a lawyer, the best way is to have all the information available, so making sure it's secure and accessible if you do need it. Those records need to be there. So you do need to make sure that if a patient does come to you and ask you for that information, you do have it on hand, provided they've asked you and provided their consent to pass it on to someone else. So yeah, certainly no shortcuts when it comes to storing those documents. You may look at potentially asking about, certain types of timeframes to deliver those records to them and things like that. But yeah, you certainly can't just dispose of them. You do need to hold them for quite a period of time. Potentially, you could look at charging maybe a small fee to access those records, but certainly it's more just to cover your costs, not something you can gain any income from in that respect.
Mike, Bruce, as a staff cardiologist in a large hospital, perhaps doesn't have a practice to sell or hand over, but he's considering his situation in terms of responsibility in a hospital network. How's it different for someone that works in an organization like that in terms of notifying, referring doctors and patients and other consultants within the hospital?
Yeah, certainly. I mean, I guess briefly, a lot of those obligations would sit with a hospital, not so much yourself. You would need to certainly notify people of your departure, including your patients. But I suspect a lot of those records would be sitting with the hospital rather than yourself. So I'd be confirming that on exit. But yeah, it's certainly not the same as a business where you would be expected to hold all those records yourself.
Yeah, the organisation has a responsibility for that infrastructure, and it's certainly going to survive one doctor leaving, you'd hope. Bigger problem if the hospital closed down, of course, for more reasons than one. We've got a question, which I guess we've touched on before, but we can perhaps speak specifically about a solo surgeon. And I guess for a surgeon, much of the work's been done through a consideration or application of an operation. the episode of care finishes once the recovery of that operation is completed. And I guess the question comes up, how do you sell a solo surgical private practice? Where does the value come in? I feel like we can draw strings from the three different presentations, but I'd like to reflect on, again, what's the inherent value that we're selling here? A solo surgeon will have a referral base. So they will have a trusted group of local doctors or hospitals referring to them for consideration. You will have an infrastructure that includes administrators, software, hardware, and workflow processes that you've built up over a period of time. Now, if they are gold standard, as in highly efficient, they maximize your profit, they make sure that your bills are all paid and that you've got great transparency of the business, then you have something to sell. Now, if you as a doctor are going to leave straight away, then maybe the referral base is going to disperse as soon as you exit. So maybe you'd hang around for a year or two, or bring on a junior to actually join your practice, to become associated with your brand and take the value and then sort of merge identities, I guess, over that transition period. That way you can maximize the chance of your referral base remaining and the referring doctors to have confidence in your younger mentee as you're exiting the practice. Just closing down and passing it on, you probably don't have much to sell, or it's going to be hard for someone to hand over a large sum of money for a practice that is really a referral-based practice. So a transition period would be my tip there, as well as maximizing your efficiency so that you've got that gold standard practice that the practice management consultants from APS can support. Kate, any additional comments on that sort of approach?
That pretty much covers off on it. It's the same. It's very formulaic to a certain extent. Anyone who's buying a practice and they're paying for the goodwill rather than bricks and mortar or equipment behind it, it's having an understanding of where that revenue is going to come from after you've purchased. And yes, if you don't have guarantees that the network that provides the patients to you when you take over that practice isn't going to continue, then that would be a challenge. So that speaks to what Dave has mentioned, which a transition period might be required. It's very different depending, regional versus city is very different as well. So that's where commercial is quite unique, and it's really good because you can tailor it to what it is, what the requirements are per practice, as opposed to just a one size fits all approach. So long story short, have a chat, and then we see what potential red flags could be from a funding point of view.
That's a nice segue into the sort of next really broad question about what are the common pitfalls when selling. I think rather than open up a whole another hour of lectures, why don't we pick up 2 points each? So 2 pitfalls that we've seen when selling a practice. And Mike, why don't we start with yours? 2 pitfalls.
Yeah, so probably I'd say number 1 is not documenting properly. So the rule is always, if it's not in the document, it's not agreed. Generally, your contracts of sale will say this is the whole agreement, this is it, everything else prior to is not included. And I have seen recently people saying, oh, we just kind of did a side deal, or we just verbally agreed this is what would happen. That can cause you a lot of problems, even if you are just literally walking away, because all the liability and things are still there and they're still potentially in your name. So that's probably number 1. And the other is timing. So wanting to rush into a sale without necessarily thinking about how that presents to purchasers. If you've been, and I've had some of these recently, where your business is intermingled with some of your more personal assets, your future purchaser is not going to be interested in those, and that might impact how their financing, for example, might play in, and also how they see your business. So you want to make that clear divide between the different arrangements. You don't want to be kind of lumping them all together unnecessarily. So starting early and working out, what are we selling, what are we keeping, what's business, what's personal. They're probably the 2 key things for me.
Thanks, Mike. Kate, what about your pitfalls that sort of come to mind when you think about things that could have gone better?
So I'll just expand on what Michael has mentioned, and that is a kind of just a rushed approach with selling the practice, and some very not the best condition financials that I've seen over the years that can cause challenges, because particularly if it looks like the practice has been used as a means to support other less practice oriented endeavors, then it can cause some challenges around the sale price and whether or not the purchaser is actually overpaying for it, and that can potentially put some seeds of doubt for the purchaser as to whether they should lower the purchase price to reflect the financial position there. That's honestly the biggest one that I've seen over the years, that because it's come up quite a few times. But again, the personal assets being tied in, particularly if you're not selling the entire practice, you're actually getting someone to buy in as a multi-partner practice. You really don't want to be in a position where you're putting your home on the line to guarantee full practice funding. Everyone else is benefiting from it, but you're the only one with the house on the line. So if you haven't cleaned that up first, it's very difficult to untangle that later on, especially no one's going to put their hand up and say, yep, let's restructure it so that you can take some of the risk off the table for you. You really need to do that up front.
Look, that's I've got experience with those different scenarios you've described there. I'd concur with those pitfalls. I think one that we haven't touched on so far is doctors undervaluing their practice, and in fact, rushing to hand it over without getting the value that they have put into it. And I think the theme across all of what we've said here in these pitfalls is that if you don't have a project plan for offloading the practice or valuing the practice or bringing partners in, without the plan, you can't optimize the benefits to you, or you can't actually set in place the right documents and processes to execute things properly. And that goes for the sake of also undervaluing it. Doctors just want to get out of their practice. They don't see the inherent value they've built up, or they haven't spent time to actually fix up some of those business anchors that I described before that have just been a burden on the practice. One of the things they want to run away from is the secretary they haven't been able to sack. If you don't enjoy part of your practice and you're trying to sell it, escaping won't maximize the financial reward. The flip side of that is people not having a realistic understanding of what they can sell, and therefore hanging around too long while they're trying to find the person who's going to lay the golden egg. Really, the valuation, and there's a question here in the chat: are regional practices harder to sell than practices in big cities? A selling relationship is only possible if someone's willing to buy, and so the attractiveness of buying something is where the value comes in and what people are willing to pay. We've given a few tips at the start of this chat about how to optimize the attractiveness of buying, and really it can be as simple as improving your website, as simple as refitting your waiting room or updating the equipment, using efficient financial tools that Kate spoke to make the practice be more attractive for a purchaser. It's certainly having your documentation and your contracts in order, because no one will pay money for a mess. And if you can demonstrate those things, whether you're regional or city-based, you're going to get a much better value for what you have set up over time. There's been a few questions about the sort of the structures for purchasing and buying shares. We can't give specific advice to people around what the best model is for purchasing or selling or setting up a practice. It is really important to have an accountant in your corner. It's really important to have a lawyer, such as Michael's team in Avant Law, who understand the industry and understand other players in the industry, i.e. other doctors that you'll be negotiating with and working with. It's not the same as having a high street lawyer, as the industry specific expertise will make it more accurate and less costly in the long run when you come to looking at things like valuation and just normal modes of behaviour for medical practices. The general discussion about passing on notes, I think we probably can't go into too much more detail. There's been a few specific questions coming up, but we have got some really good information sheets in Avant, and also there'll be an opportunity to reach out to anyone on the call today to ask questions in the future. So if you have got some specific questions, very happy to answer them as a way to explain more about how Avant can help you in this transition out of practice. So, Michael, I'd like to thank you a lot for your presentation. I always learn something when I hear from the lawyers or remember something that I feel like I've forgot. But the main thing I remember is that I need a lawyer in my corner. So thanks for presenting tonight. And Kate, you're passionate about finances and it really shines through. And Kate's industry experience is really helpful when it comes to optimizing the finances for medical practices. What's great with this series is we've got a little bit of a giveaway as well. So we've got a QR code here, which you can scan, and you can book a meeting with myself to talk about how our practice management consulting team can help you project plan your exit out of practice, how to optimize the value, and whether that's over months or years, certainly up for that. Avant Law can be booked through here in Avant Financial Services as well. And if you do book a meeting, then you go into the running for a $250 RM Williams gift voucher, which I'm told will buy at least one shoe, possibly 1.5, but go well on the way to getting you a nice pair of leather boots. So on behalf of Avant Practice Solutions, Avant Law and Avant Financial Services, I'd like to thank you for joining this webinar. Also, we will remind you that the webinar recording and additional resources will be emailed out to all registrants. Before you leave, can you please complete the post-webinar survey? A pop-up will appear, and this really helps us for planning future topics and importantly, preparing jokes for future evening get-togethers around the fire with Avant Practice Solutions, Law and Financial Services. So on that note, thanks very much for joining. We look forward to all speaking to you and helping you on that transition to exiting your practice. Good evening.